Alright guys, welcome to the Quantum Code Trading Discord. This is a quick intro video about, the level of knowledge that's required, some basic information that we base all our conversations, our decisions off of, and a little bit of an intro into quantum code, what quantum code is, how it started, and about me. So first of all, there's a certain, set of information that is important for you to know so everyone's on the same page, right? And also the focus of quantum code trading is to educate people so they can trade profitably and consistently. Whereas, most people think that they're profitable or think that they're consistent, they're not, right? And the data proves that, right? And then on the other side, we prove that we do trade consistently, like on our dashboards, we will cover later, but just so you can see, these are live trading since around 2 years now, and we'll get later into how this works. But the focus is for people to understand what consistency is in the first place and get them from wherever they are right now to a point where they can predict how much money they're going to make next month in trading, right? And yes, it's possible. It's just math, physical laws, and understanding of the market, what it really is, right? You don't want to leave anything to chance, right? And we'll get into all of that. So first of all, about me, my name's Phil. I'm from Austria originally. I'm 23 years old. I've been traveling the world for the past couple of years. I'm in Bali right now, and I'm planning on staying here for a while. And when I was 16, 17, I started with business. I was playing hockey, and I wanted to be a professional hockey player, but it didn't, the chances were pretty slim for that to happen. So I was looking for other ways because I didn't want to have a normal job. So I started doing e-com, and that was going well. Anything that I started, I just dive in right away. It was going okay. We had ups and downs, but the best month we had was like 100 grand or something like that. And then on the side of that, I started trading with Alex, who's also in the Discord, who ended up being a partner in the hedge fund. We were trading only XRP at that point, and we got into a group a Discord group, where we started just posting signals, and people loved it. So eventually we had this closed group within that group where we were posting signals, and it was attracting more and more people. And some of those people were investors that we started working together with, and then they started funding us for them to, to build strategies, algorithms, and auto trading bots and stuff like that. So that's how our hedge fund started. And then we were doing so much development, so much software, so much algorithms, that our software development branch basically was so good that we could just branch it out and have a separate software company that started taking outside projects, which is Quantum Code, right? So Quantum Code is doing a lot of automations, a lot of back-end algorithms, and a lot of hedge fund funded projects, right? So that's Quantum Code. And now we have Quantum Code Trading, which is this Discord, specified for trading, specified for educating people to get to a specific level, so then we can work with them, right? So, and that's what this is, right? So first of all, the main thing, the core thing that led to, I can say, to our success in trading, in developing strategies that work. And by the way, the strategies that I'm seeing here that we use are the most consistent strategies I've ever seen in my life. And I've looked at a lot of strategies from a lot of traders, good traders. And these are the most consistent strategies I've seen in my life because of very, very, very simple rules, right? Which are the core market rules. I was talking to Alex a couple of days ago, and I told him that, because I was looking through the strategies, and I don't look at the dashboards every day. They just trade, right? I know that they're gonna do well, over a set period of time. So I talked to him, and I was like, dude, our strategy, I still haven't seen a more consistent strategy. And he was like, yeah, well, obviously, because they're so dumb that they have to work. And I was like, exactly, right? But it took us 2 years to get there, right? So they're simple, but they're not easy, right? Because it took us 2 years of 14 hours a day just grinding it out, trying to figure this stuff out, and the millions of dollars in development cost and losses. So yeah, the core fundamentals are very, very important, which is something that people just look over, right? Or think that they understand. So okay, let's go over the core basics that we base everything off of, right? So let me just go to Bitcoin, probably go to like the 15-minute, or let me go to 1 hour here. Okay, so how does a market behave, right? Well, what is a market? Market really is a connection between a buyer and a seller. Simple, right? So, a market has a fair price where, the price is just gonna hover around that point, and whenever one side is exhausted, it will go to another price, right? So this is one core market principle, right? Which is that essentially the market's either in a range or going to another range, right? So here's a range, here's a range, here's a range, which is kind of the same range as before. Here's a range, and then you get the idea. Here's a range, here's a range, here's a range, right? So so that's it, right? A market either ranges or is going from a range to another range, right? So what is the basic thing that you can do? Well, you can trade, the principles of that, right? And this comes back to, again, how the market works. So people are trading a market, right? And some people, right, are making consistent money out of the market, right? Whether that's individuals or institutions, right? The market is a zero-sum game, meaning that for someone to get $1 out of the market, someone needs to lose $1 in the market, right? So the point is that if someone wants to make a lot of money consistently, then a lot of money needs to be moved to that direction. There has to be constant cash flow from one side to the other, right? And the two sides are retail traders and institutional traders. Institutional traders, we define in the Quantum Code Trading Discord as individuals or companies or institutions that are able to generate money consistently from the market, right? And with generate, I don't mean it appears, I mean it transfers from retail traders. And retail traders are there to feed the institutional traders, and they're there to constantly put in money into the market. How do you convince someone to constantly put in money into a market? Well, you create emotional triggers, right? Because this is about money, so emotions are very involved for a lot of people, for most people, for 99.99% of people. Emotions are involved, and you trigger those emotions in order to trigger actions that you want, right? I'll get into detail, and there's a lot of calls and a lot of content that we've done exactly about this, which is very, very important. A couple of members in the Discord, they went through a challenge, their 5-day challenge, and they're trading from starting day 1 to day 5. The difference between that is insane. Like, after they didn't know how to trade before, and after those 5 days, they're making calls that are on the level of professional traders. And the only thing that they really understood was the market principles, right? So a small amount of people is going to make a lot of money. So a lot of people need to lose some money, right? And that's, your average Joe that just goes into the market with $1,000 and just over leverages, doesn't understand leverage, and isn't a trade. The trade seems to be going against him, and without a strategy, without a plan, he just panic sells or panic buys or panic whatever, right? How do you make sure that you're an institutional trader? How do you make sure that you make money consistently out of the market? Is by making sure that you have a plan, right? A solid plan that has been tested out over and over and over again, where you've seen hundreds of trades of it. And as you did, when you're live trading, any market movement that you see, you have seen before, and it doesn't trigger any emotional reaction in you, because you you know exactly what you do because you planned it before. If the price goes against you, you know what to do. If the price goes for you, you know what to do, right? So the market's trading in ranges or moving from range to range. So there, by definition, because this is, you know, a market behavior that we can agree upon is you know, at least somehow the case, very much so the case. So what we can do here is say, okay, well, how can we trade this? Well, there's two ways that we can, there's many ways, but two ways I will cover right now that we can trade it with. There's a trend reversal strategy and there's a trend following strategy, right? Trend reversal strategy is a strategy that will, that's betting on the fact that when you're in a range, you will bounce from that range, right? And just stay in the range. And that is, you know, every time you touch the top or bottom of a range, the chances are higher that you will turn around, reverse, than not, right? So we can bet on the fact that that will happen. So that's the trend reversal strategy, right? So every time we're at the top, right, we short. Every time we're at the bottom, we long. And we put it together. You know, I'm not going to go into too much detail about the strategies. There's a bunch of strategies in the Discord they can use. But, you know, if we combine it with some other confirmation on time frames or on indicators, then we can, you know, look at different perspectives into the market, right? So that's a trend reversal strategy, right? And this strategy works if the price reverses at the top and bottoms of the range, and it doesn't work if the price, you know, when the strategy is invalidated, and that is if the price does not reverse and continues up, right? That's a trend reversal strategy. Now, a trend following strategy is a strategy where you have a trend, where you have a range, and the price does not reverse and continues up. So the strategy wins when the price does not reverse and continues up. The strategy loses when the price stays in the range. The trend reversal strategy was making money when the price stayed in the range, but it lost money when the price breaks out of the range. The trend following makes money when the price breaks out of the range, but loses when it stays in the range, right? So these are two negatively correlated strategies, meaning that when one's losing, the other one's winning, and vice versa. However, both strategies are profitable by themselves. So what happens if you put them together? They will actually help each other out in the overall equity curve, and your volatility is lower, your consistency is much higher, which means that you risk less, which means that you can use more leverage, which means that you can make more money, right? This is just a simple principle, and this is what we did, right? But we didn't do it with two strategies, we did it with like 9 strategies, right? This is a bundle of strategies. You see 9 strategies here with different allocations, and with them trading, right? And this is live running data since a year and some change. And these are the strategies that are currently profiting, like in a trade, profitable. Here are the performance of the bundles, here are the performances of the users, and our strategies, here are the separate strategies by themselves, right? FTM right now is doing pretty well, and if you look at the description, there's going to be an exact description about the strategy. So if you're looking for strategies to trade, right, you can just go through the dashboards. You'll have access to it in the Discord once you unlock the member role, which I'll tell you how to do it right now, and you get to look through all the strategies and pick strategies that we can then work together on and, you know, improve upon, right? So that's very, very important. And what most people also don't understand is how they manage their risk, right? So by not understanding the core market principles, they don't know how to manage risk, which will guaranteed blow their account. If someone comes into this onto the Discord and they're doing well, right? They're doing well. They're making, they're turning like $100 into like $2,000, you know, and they're like all happy. They're like, yeah, I'm going to be a millionaire in 2 months. And I look at their trades, I look at their strategies. If there was an index where I could bet that traders will lose all their money, that's the only thing that I would do, because it's so predictable, right? Because if you're volatile, by the laws of physics, the account will, as much as it goes up, it will go down again, right? That's no way of making money consistently, right? That's gambling. That's what people in a casino do. That's what retail traders do. If that's what you want to do, fine, right? Go ahead. But my goal is to spend time and energy developing something and working on something, looking at it every single day for financial gain, right? That's the reason we're trading in the market, to make money, right? And I want to make sure that that's consistent, because I want to make sure that, a month from now, a year from now, I have a range of how much money I'm going to make. And that is possible if you, set it up the right way, if you distribute, and if you limit and manage your risk the correct way. Let me give you an example. So now we have, this is a simulator with the strategies that you've just seen here. Let me reload this real quick. And so this is bundle 1, right? This is bundle 4. Let's just take bundle 1 and put the allocations to 100, right? And this will also take live data and our strategies and give you the equity curve. So this is on spot, by the way, so no leverage, and it did pretty well, around 2,000% profit, right? So that's all good, right? But most people, $10,000 to $200,000 is fine, but for most people that's not enough, because that's over a year and something, first of all, and second of all, because I know, and the second of all, if you start with $1,000, then that might not be enough for you. So what you're going to do, you're going to use leverage, right? Which is fine, but you need to know exactly how to manage that, right? It's very, very important, because look, okay, so I've seen people do like 80, 90x leverage, right? The average leverage on Binance is 20x, which is crazy, by the way. But it's 20x. The Sharpe ratio of our strategy is 2.8. If you don't know what the Sharpe ratio is, it's a ratio, or it's a measure between how profitable and how consistent the strategy is, right? So the higher it is, the better. If it's above 1, it means that it makes sense for you to trade the strategy, because you get more profit for the volatility, for the risk that you put in, right? So above a 1 is good, above a 2 is very good, getting closer to a 3 is excellent, right? We have a 2.8. So the average leverage is 20x. So let's just do 20x and see what happens with the account. No risk management other than the one before, right? And the numbers don't make sense anymore, because the account completely blew up. It went below 0 here, right? So it completely blew up, right? Because there was no and this is what is guaranteed to happen to you when you use leverage and when you don't risk manage. You don't even need to use leverage. It's just about your volatility. If you don't know what your volatility is, this is going to happen to you, right? And this is, if you've been trading for a while, I'm sure that this happened to you, right? Where, you trade well, your strategy is going well, for days, for weeks, for months even. You can do great for 6 months. And then this one trade or one day comes where, the entire account just disappears, right? All your profits are gone. All the entire account is gone, right? What happened? The institutional traders, they had a payday with your money, right? You were building up hope, right? Hope. Maybe you even put in more money because you saw that it was working well. And you were building up hope. And then there was this one day where it just disappeared. You will be a little shocked, right? But then eventually you will come back, because you're like, hey, yeah, I had a bad day, right? Like, I'll just figure out how to, not have that bad day. And, most of the time it was going great. It was working, right? I saw it with my own eyes that it was working. So we'll come back and you'll do the same exact thing again. And the institutional traders will take your money again, right? So it's either, long periods of winning with one huge loss, or a huge win with slow periods of losing, right? And that huge win, when you lose, small amounts, then you justify it, because you're like, hey, I know I had this amazing trade, and it happened, like, I got the money from that trade, so I know that it's possible, and I know that I can do it again. So I'm just going to try again and again and again. And then, every once in a while you have a big trade, but it doesn't even account for the losses that you made, which, in turn is a constant cash flow from you to institutional traders. right? So this is what happens when you over leverage. However, when you take profits, or you have some profit taking management method. There's one we have here. It's just called profit taking. Really, what it is it's a layer above the strategies where you have strategy here, but on the bundles that we have here, there's a strategy above that, managing the allocations and taking profits out of those strategies, right? So if we put it to the highest level while trading 20x leverage, then what will happen is that the strategy works again, right? Because we're managing the leverage, right? We understood it and it works, right? So now we went from $10,000 to $670,000, right? Which is 3 times as much as before, as we were taking, as we're not with leverage. The difference here is that we're taking essentially 100% of the profits from the strategies, which means that, we're taking a lot of money off the table, so we're not exposed to it. Rather than before, without the leverage, we're just compounding all the time. So all the money that we made, we're risking again. Here, we're doing higher leverage, which you would think is riskier, but we're taking more profits out of the market. So there's actually a larger sum of money that's not exposed to risk anymore. Right. So this is just something that I wanted to show you, which is important to understand, right? And this is exactly something that we'll cover in the Discord. And then on top of that, right? So we have our strategies here. We use stochastics a lot because they work well with timing. When are we at the top, when are we at the bottom of a range, right? So what we did on top of that is this is also very, very interesting. Is that we were doing this strategy, we're actually doing the turtle strategy, which is in the dashboards, and we looked not just at the position and the stochastics, but we're pulling at the data and we're pre-processing it ourselves, which is a whole different story. But we see all the small little changes in the stochastic as it happens live, right? So with that, let me just show it to you real quick. So this is the stochastic, right, on Bitcoin, I think. I have it open right now. So this is in 30-minute intervals, right? And these are the different time frames and different intervals, all written, together, aligned in 30-minute intervals, right? So, green means that it's going up, red means that it's going down. So here, right now, we can see that the 30-minute stochastic is higher up, 1 hour is down, 90 minutes down, and then the higher time frames are higher up, right? Still going up, right? They're green, right? But now we can look at the difference of how fast it's moving, right? So here we can see that the 30-minute has been going up a lot, right? And now it's kind of slowing down. It's still going up, but it's like slowing down. It's curving down, right? Whereas here, these lower time frames that are kind of topped up, we could be like, okay, well, we can short here because they're topped up. Not really, because the difference is showing us that they're actually curving further up, which means that the price is going to go up, right? So with this, and a bunch of other indicators, we can predict where the stochastic is going to go, right, on different time frames, especially when you look at lower time frames. And we had the strategy where we were trading in like a 4 hour and 8 hour, so swing trading, and we knew for a fact that the price was going to dump in like 2 to 3 days, right? So we were just getting into our position, and that was it. And we were just waiting for that move. And then 2 days later, right, we're already positioned. 2 days later, a news article comes out, and then the price dumps. But we knew before the news article that the price is going to happen, right? So the news and everything, all the impulses that you get that are freely available are there for retail traders to trigger some actions or reactions, rather, right? And that's something that we're trying to get you out of by education and understanding what's going on in the first place. So then, you can plan your strategy. We'll give you a strategy. You can build on it. You can get it into your muscle memory. And as you have that, then you can trade. And then when you trade, you don't have any emotional reactions, emotional triggers. You know exactly what to do in every single scenario because you've done the work beforehand. And then when you trade, you're actually consistent, right? So that's the point of the Quantum Code Discord. And that is something that we'll be working on every single day. There's a lot of great people in there, so I'm sure you'll have a good time. The last thing I need you to do is to make sure to to unlock the member role. You can just go to access.quantumcode.group. Or you can go into the Discord, and on the Discord in the members list there's going to be get pro access. So just go there, log in, right? So just click and create an account. It takes like 2 seconds. You just do it automatically through Discord, and then go to digital products and click on the free access to Discord. Get the free access, add to cart, go to checkout, type in your name, and place order, and that's it. And then you will automatically have the member role in the Discord, which will give you access to our software, to other channels, to live calls, to all of that. So just make sure you do that, and other than that, I'll see you in the Discord. I'll also send you a couple of videos that you can watch that were very, very important videos, where you get much more insights into what I've just been talking about. That gives you more insights then into how to trade profitably. So that's all from my side, and I'll see you in the Discord.